Welcome aboard, everybody. Today is January 10th in the new year, and we're coming at you from Playa del Rey. Gil's in, I suppose, the lovely beachside office, and I'm over here in London at the moment. It's already dark because London's quite a bit further north than Playa del Rey, but then we get the added advantage of long days, long summer days, so looking forward to that. At any rate, we've got markets that were hitting new highs today, shall we call them multi-week highs, and then reverse back down. The volume currently is running a bit higher on the S&P, but a bit lower on the NASDAQ. And it looks like as far as general market action goes, it looks like it might be the rest of the day might be relatively inconsequential. The markets had been sailing sideways in a fairly tight, constructive fashion. So today's gap up looked quite bullish. But as we know, the markets generally don't go up in a straight line, especially in the last couple of years. So when you do see these gap ups, the gaps are often filled as the market retraces and washes backwards and forwards before moving higher. We've got QE on deck across all central banks, so that bodes in the market's favor. GLD and SLV were up nicely today, but they remain firmly in a basing pattern, and part of the issue with them is when is QE in the U.S. going to be phased out, since some of the Fed members have expressed an interest in either phasing it out or removing it altogether sometime this year. That, of course, is just conjecture at this point, and it's kind of hard to believe that that would actually happen, just simply because the amount of debt on the books and the economic growth that exists is so tepid that removal, even a slowdown of QE3, I think would be enough to derail this very fragile recovery. I almost don't want to even call it a recovery. So that said, I think that bodes well ultimately for gold and silver. I would expect, we don't like to make predictions here, but just for the sake of argument, if you look at GLD, if you look at the price of gold, it's been in an uptrend since 2001. And if you look at it currently, it's in a very long and constructive basing pattern that started out back in late 2011. So given the QE backdrop, we're, of course, watching GLD and SLV for any potential breakout, which may take a number of months to materialize. One quick thing about Apple, and then Gil can talk more about that. It's been clearly lagging the general markets. It broke down through the 50-day, then the 200-day. It hasn't been able to rally above the 200. It's clearly struggling. It exhibits telltale signs of a leader that is fallen, and odds are that it still has some downside to go. I think the biggest problem with Apple is well, it's got a huge market cap, and if it's going to say go up even 50% from current levels, what's going to drive that 50% price increase? You know, is it going to really be a $750 billion company without killer apps? It had killer apps. It had the iPhone. It had the iPad. It had a number of apps that it was first to market, and it had it had basically the ability to get these products out into market at the right place, right time. You know, Jobs was an absolute master of that, and I don't see any killer apps on the horizon. Apple TV, no, that's not a killer app. So, you know, I don't know why Apple would be keeping quiet about this. They're usually very vocal, and so I think they're out of bullets, or let's just say they're out of magic bullets, and I think the stock behavior is telling us just that. So I think Apple is a good short candidate. We've been short this off and on since the peak. We've been on the news talking about it, and we'll continue to survey as the price chart unfolds. Gil?
Yeah, I would say, you know, what I think is fascinating about Apple is that even when it looks to me like it's going to try and bottom, so we were talking about this white coffee and low, and of course that always brings in a bunch of emails from people wondering what the heck a white coffee and low is. If you read there's a book out there, Charting the Market, the Wyckoff Method or something like that, the Wyckoff Method for Charting the Market, something like that. And he talks about, if the stock's making a low, and what it'll do is it'll come up off the low and then pull back, and you see the volume dry up like you're seeing here on the Apple chart. But what's interesting is you see that happen, and it really can't, on the other side, obviously if you're going to get a low, you have to have some buyers come in to push it up off the low. But even though you get some of the selling drying up on the pullbacks, you don't see the stock picking up any big buying volume. And so the other day, 3 days ago on this chart here, this shows up red because I color code these like candlesticks so that if it gaps up and closes lower, even though it's up on the day just like it is today, it'll look red. So it's telling me that that's a reversal day real quickly to my eye when I look at it. So I use that on these E-signal charts. If these were your daily graphs or your Market Smith or whatever charts, this would show up as blue, and right now this would be showing up just barely blue as Apple comes in towards this low that it's been holding for the last few days, right around, say, 516, 515. But it's fascinating to me that it doesn't really want to take off here, and yet the market continues rallying. Usually you would see a big stock like this just take off. And so I'll tell you a little story. This morning I come in, and I'm actually short, not a big position on the stock, but I get up this morning and I see the stock, trading up to the 522, 523 area. So I'm not going to mess with this. So pre-open, I just cover the position and get out of the way. And of course, I watch it drive all the way up to 531.80 up here. This is about, with an hour and a half to go before the market. I think, well, that was smart. I just dodged that bull or just move out of the way of that. But I'm ready to cover the stock very quickly if it does show some strength to the upside, which it did this morning. And then immediately the market opens and it starts to roll back over. So now it's a short again as far as I'm concerned. We come after it and it's not able to get the slower or the faster 6-period moving average is not able to get above the 20 period here, and it's kind of rolling over again, and it's really interesting to watch this. So I'm short a lot more than I was coming in overnight, and doing pretty well with that position right now, but we'll see how this thing pans out. Now I've considered, if you're looking at the indexes, and all you can say really is that we had a sharp move to the upside. The market has held those gains. That in and of itself has to be considered constructive. Although these days I have to tell you, I wonder whether charts and everything aren't just all phonied up, given that so many investors have left the market and all it is QE money sloshing back and forth. But you see today it tries to come out, and there is some overhead on the left side on the NASDAQ. The S&P and the Dow and the Russell 2000 are all at higher highs, and I think they're breaking out. But this is reversing now. And Dr. K, do we have more volume today, or are we looking at less volume today right now?
Less on the NASDAQ, more on the S&P.
Okay, so yeah, so the NASDAQ coming in, so it's pulling volume. You have better volume on the S&P. We'll see how this day pans out, but this is just something that I've been considering. And there are a lot of stocks acting well, and we own a few, and they're acting okay, but we'll see how long they last. I mean, we've seen other rallies in the market where you see stocks go up 10, 15, maybe 20% if you're real lucky. And that's about it, and then they roll over again. So I've been a little bit leery of the whole rally here that we've seen, because we know how quickly it can reverse, and it's very hard to establish any kind of fundamental conditions for an upside rally. And to me, it would mostly have to be just money flows coming out of somewhere else, perhaps, as someone talked about, an allocation trade from bonds into stocks, or just QE out there sloshing around and pushing everything higher, and maybe that's all it is. I don't know. But there does seem to be some stocks acting pretty well, and there are still some stocks acting pretty weakly. But if you stop and consider, the market actually topped in September, and we came down, and now we've rallied up, about 2/3 pretty much, maybe as much as 3/4 of this breakdown that we had from September to November. And now if you started to roll over here again, then I would think that you might see Apple come in and break down, because a lot of times what you'll see happen is the market will be trying to rally off of a low, but yet some stocks, some former leaders will still be trapped in weak formations, and I would have to say Apple is probably the single stock that I've seen that looks the weakest and the most susceptible to a successful shorting campaign. But you could see the stock break down in a market reversal here, and that's sort of how the two would coincide. So, right now we're watching the stock break to lower lows, which, again, I think is fascinating to see when the market's been acting so well. So, that one stays on our radar, and it just amazes me that it's just not able to get any kind of upside impetus, even though it's selling at 11 times forward estimates and was the golden stock. But again, some of this could be due to this phenomenon I call it the trap long phenomenon. And this occurs in just beloved stocks, bulletproof beloved stocks like Apple. When they start to break down, you reach a point where buyers just have to get in, and they're screaming to get in. But you can see that you had a big spike here in November, another big spike here, buying spike in December, lower buying spikes in the middle of December, and then an even lower buying spike at the end of December. And now here we just have the thing fritzing out. So it almost seems like what you have here is a lot of trap longs. A lot of people are in the stock, and they are long and strong and looking for a bounce. And if it doesn't happen, this thing starts to break down. You can see a panic move through the 500 low that would break the neckline in this pattern. And it's possible that if the market reversed, Apple could lead that, and you'll see that sort of action occur simultaneously. So, but on the other hand, there's so many other stocks that seem to be acting pretty well that it's hard to make a call one way or the other. So what we do is we play Apple as a weak stock, as Apple, and on a stock-by-stock basis we'll short that, whereas on the other hand we can be long some situations that are continuing to work. So that's really been the story of the day, and just looking at some of the things that we like here, the NSM, you have a big Bible gap up in here. Here it is coming back towards the 36.60 low of 4 days ago, so you got to watch that as your stop, I think, because this thing could flip back in, and it is a very volatile stock. If you've traded it and watched it move around intraday, it can move a good 3-4% within 5 minutes or so. So there is that aspect to it. It's a very volatile stock, so we'll just have to see what happens as the thing starts to come in here and hopefully holds this low. But I wouldn't be averse as long as the market's holding up and everything looks fine as it comes in, looking to pick up shares if you haven't bought into this already. BRX, Regeneron Pharmaceuticals, another one we liked before when you had a pocket pivot here, and now you're getting the breakout. But interestingly, no volume on the breakout. You notice here, but maybe it comes in later. But I do think that is an interesting phenomenon here, where it acts well here, but the breakout that clears to new highs, it's coming up the past few days, is not on real heavy volume, but it is moving higher. So almost seems like a pain trade. On the other hand, I'm looking at something like a Cirrus Logic today. This one became shortable this morning right off the 200-day, and we had a signal in it earlier. I'm just kind of watching, see what happens here if it rolls back in. It doesn't really, I don't know if it correlates to Apple, but it doesn't seem to be since we bottomed in December, because Apple is closer to its lows, and this is moving the opposite direction. But this would be a logical area for it to run into resistance, and so I think that's something to keep an eye on. Another one I think that looks pretty weak here, and we talked about this last week, was Coors and shorting into this rally. And now you're starting to see it break, and the volume's picking up today. So that one's in play. I'm short that one from in the 52 area earlier today. So, something's looking good. We got LinkedIn punching higher on a breakout, on a gap up breakout. Is that a buyable gap up, Dr. K?
Yeah, based on, well, let's see, it gapped up high enough, yeah, it would be, because, well, then it filled part of that gap, but where it gapped up would make it a viable. Although I prefer to really, in this case, I prefer to actually look at not where it gapped up at the open, but just how it trades during the day. So if it closes the gap, then it no longer is a viable gap up. And in this case, it looks to me like it probably is not a viable gap up. That gap that exists right now, I think, just eyeballing it, looks like it's just not quite enough. So no, it's not a viable gap up. However, it could be a legitimate breakout.
Yeah,
and a pocket pivot. It's going to hit the volume it needs for a pocket pivot. That's to be certain.
Yeah, it looks like it's on track to, but we'll see what happens in here. Anyways, I'm a little skeptical of this breakout. You're running into this area here, and earnings come up in the first week of February, but it is strong. I was, maybe looking for potentially a gap up or a breakout after earnings, and that I might be more willing to play because you have the earnings out of the way. But yesterday they did announce that LinkedIn has surpassed 200 million members, which I think is a big milestone for them. And their business continues to grow as it really kind of morphs into the old, what was that, Monster Employment or whoever, what was that one's website, Dr. K, that was an online job listing?
Yeah, the Monster.com or something.
Yeah, Monster.com. So, now we got Monster Beverage. That's another doggy stock looking pretty weak here. Looks to me like it wants to roll over. If you see it breaking the 50-day on volume, it might become a nice short. Keep an eye on that one. But anyways, just as long as we're talking about monsters, I thought I'd bring that one up. This Nam Tai, is trying to build a little base. I don't know. Is this going to be you're almost potentially going to do a little pocket pivot move off the 50-day. Keep an eye on that. Facebook, fooling everybody and powering higher. But Facebook reminds me a little bit of Amazon back in 2003, and I just remember Amazon at the time was making 65 cents a share annually in 2003, and it formed a cup with a handle and broke out, and it pulled back for 4 weeks, came off the 10-week line, and then rocketed higher. And if we go, let's go back and look at that. See how fast I can get there. Maybe if we shrink this, it'll get us there faster. But looking at 2003, I remember this really clearly, but the stock had come off of this low, and you had pulled back 1, 2, 3, 4 weeks. Again, these should all be red, but the way I color code my charts, I want to look at reversals. So you can see here, even though this was red, you closed higher right at the 10-week line, 1, 2, 3, 4, boom, and then you came out again. And this kind of reminded me the way it's occurred. You had 3 weeks of above average volume, and the final week was a lower volume, and it held the 10-week line, and then it came off. And if you look at Facebook, similar sort of situation. You had a couple here coming down on above average volume, and then you dried up very quickly, and you held here, even though you were down all 4 weeks. And now here you come out of this weird-looking cup and handle. But, with the stock sticking up like this, next week supposedly they're going to be announcing something exciting, maybe a Facebook phone. I don't know. Dr. K, are you going to get a Facebook phone if they come out with one?
No, not likely. I'm going to wait for all the bugs to get through.
It doesn't sound compelling, and I don't understand how a company like Facebook, which all they do is have these web pages where people put up silly pictures of themselves and whatever else they put up. I'd like to do that myself, and just keeping in touch with family and friends. Mainly, that's what I use Facebook for. But I don't really understand how their technology translates into some sort of killer app, as Dr. K would say, for a phone. So, kind of puzzling to me. But it gets everybody excited, and the stock's moving higher, and the volume's even higher today than it was yesterday.
And the problem is that all these phones, the Android and the Apple, and so on, they already have apps that integrate Facebook right into their phone. I mean, Facebook's an amazing social app. It's a social site. It's the best, and people use it heavily to stay in touch with friends and do whatnot. But the question is, how do you monetize that? And I know Facebook is attempting to through all these different mechanisms, but there's no clear killer method that they've got, because the playing field is so competitive. And while they have the largest audience out there, it still remains to be seen if they can really accelerate their revenues through any sort of killer demonstrative strategy. All their strategies are very good, and they generate a lot of revenue, but given where Facebook is, what, a $50 billion company, $60 billion, how is it going to get to $100 billion? How is it going to double from here without having some sort of killer strategy out there? And I still don't see any signs of it on the horizon.
So why do you think the stock keeps going higher?
Well, the revenues are pretty strong. I mean, if you look at, and I'm not talking sales, because sales is pretty weak, and as far as these estimates, they're pretty weak as well. But if you look at the sales, you get big numbers there, but I don't think those big numbers are really going to support where it's even trading right now. It's a $35 billion company, and it can go higher for an interim, but I don't see it forming a base and breaking out and shooting the moon. Just the numbers don't support that kind of price behavior, and it doesn't have any sort of killer app out there. A Facebook phone, I don't know enough to really criticize, but I can just say that that whole area is vastly oversaturated, and I don't see how a Facebook phone is going to be any sort of killer app, because again, it's a saturated market. When Apple came out with its iPhone, now that the market really needed something like that. There was nothing out there like it. But I don't hear anything in the pipeline of Facebook coming out with any particular strategy or application or hardware that's going to revolutionize things.
So would you sell into this rally?
I wouldn't sell into it, but at the same time, I wouldn't touch this. I would have to see demonstrably constructive price volume action in this base. I'm looking at the weekly right now on Facebook. And in other words, it needs to do a lot of work before I'm convinced that it's going to break on out of here. I'm a betting man. I don't think it's going to happen. I think this pattern we're seeing is defective, and I think it's going to, to go up a little higher, and then it's going to retrace, and the base it's going to form is probably going to be pretty sloppy and choppy and not actionable, except on the short side, perhaps.
Okay, so, well, it's still moving higher. That's all I know. You did have these big spikes down here, and it continues to move higher. So wait and see what happens. I think though at this point, let's say you did buy it lower somewhere, you could use this breakout point as a downside stop. If it's going to fail, it's definitely going to break down through there. But right now it's obviously probably the mother of all short squeezes going on right now. And what I thought is interesting is they got 175 million shares come loose in here right in mid-December, and that gets absorbed pretty well. You don't really see any heavy selling. It reminds me a little bit of the donuts, back in 2001 when everybody wanted to short it on the lockup, and that ended up causing a big upside move where the stock doubled, and then after that it basically blew up. So maybe that's what you're seeing in Facebook right now. But so far as a trade, it's been working, and I played it on this move and made money on it. So it's been working. That's all I know. And until further notice, it's continuing to work. Anyways, there's one other thing I wanted to talk about, and it was Celgene. I remember this breakout. You had a pocket pivot here, and it broke out. It looks like a cup with handle, and then it comes in and bounces off the 50-day moving average. And of course, if this was a breakout point using a 7 to 8% downside stop, it never really broke down that much. I think it came off about 4 or 5% or so, and then it bounced off the 50-day moving average, and then it just rockets to the upside. And so if you bought into this, you might be frustrated. But there's something that I missed on this, and it explains to me the movement in the daily chart. And that is, if you're looking at the cup with handle here on the weekly chart, let me blow this up. If you look at this, where's the handle really? Is it this 1 week? And if that is true, then what you're doing is you're actually kind of wedging higher. You're moving higher up along the lows rather than drifting down into a nice handle. And so it's not until it does this move here and then pulls back. Now you got a 2 to 3 week handle here that kind of corrects this weakness or this sort of wedging type action along the lows. And now you get a big breakout. Now this thing is going nuts to the upside, and unfortunately I don't own it. I hope the person who asked the question about it last week does. And that looks pretty good, and some of the biotechs have been acting better. Regeneron made a nice comeback after selling off, and I think that's a good example because we actually had a position, and this wasn't a huge one, 10% position. And Dr. K and I were talking a couple days ago on Tuesday morning when this thing gapped down, and it's like, okay, what do you want to do here? And in most cases, if the news is good, and we thought that the sales of Eylea, that's their flagship drug, were so hot, why is this bad news? We couldn't figure out why it was necessarily seen as bad news, so we just hung out. And what it did is actually came down to the, if you look at the weekly chart, it hit the 10-week line perfectly and bounced off of it. So it's recovered and went back to a higher high. Now it's just in this sort of little consolidation following the pocket pivot of 6 days ago. And it's just kind of hanging out there. And, I can't say that it looks pretty good. I think that's constructive. But it could just continue basing and not really go anywhere. So we'll just see what happens with that. But it is an example of how sometimes if you really understand the story, and we like to think we do on this stock, and it has outstanding fundamentals and nothing's really changed, you see a break on news like that, you could try and hang out, assuming you're not running a crazy Gil position of 100% equity. In this case, it's a 10% position. You can just kind of hang and let it play out. So that worked out. But I hope that's, do you see that as constructive for the stock longer term, Dr. K?
Well, it's been able to buck a downtrend, and so it looks to me like it's okay. I mean,
Okay.
We keep the stops tight on this, but it looks all right to me.
All right, let's go start running through the questions. We got a lot of them today. Read your book. We like the OWL ethos, good summation of your approach, etc. Indicators are okay. Yeah, hopefully, I think a lot of people so far have liked it. There are some typos, and this is always frustrating because even though we go through this thing with a fine-tooth comb on the proofs, there's always something somehow that seems to slip through. And question number 4, while the explanation of the answer is correct, the actual answer should be F on that. So, and there's also And later on, there's a chapter where we talk about Lockheed Martin LMT in 2001. And I actually remember going through the proofs in that, Dr. K, and they had 2011 all over the place, so I changed all those to 2001. And there was a number of instances where this had occurred. And I thought they were all corrected, or that, when we sent them back the proofs, and I guess a couple of references there show 2011. But I think people can figure out what's going on there, and not too big of a deal, hopefully. So, but even in our first book, there were a few errors. There's always just a couple, three, a handful that slip through, and I think one of the functions of that is just the fact that, or that is a function of the fact that we pump these things out very quickly. I don't think any other authors, at least the ones we've talked to, they seem to spend at least a year on a book to write it, and we pump these things out in 3 months, and that's usually the schedule Wiley sets for us. So I guess we're held to a higher standard, although it does give me a headache at times, but whatever.
Yeah, that first book was, I think they were really impressed that we were, I think, one of the only authors to beat or make it to their deadlines, because I think, didn't Darlene say that you normally grant lots of extensions knowing that authors aren't going to be able to meet the first deadline?
Right. Ultimate Software, someone's asking about this one. You got a pocket pivot here yesterday. Last quarter's earnings were up 61%. It doesn't look too bad. I guess if I had a problem with it, it would be how thin it is. It really trades about 10, 15 million a day, I think. The average volume is, 209,000. It trades about 20 million a day, something like that. So it's kind of thin, but it's trying to come up the side. Do you like that, Dutch K?
Yeah, I've never. It's a sloppy pattern. Never been particularly interested in this. So it's also if you look at it's dragging along to the upside in an unconvincing manner.
Kind of like that doggy Kihu that we didn't like a few weeks ago. That's what I hate. You look at these things and you think, I'm not into that, and it goes higher, of course. So IACI, someone's asking about.
9 times out of 10, these types of Chinese stocks don't work.
Yeah.
It seems to be.
Yeah. I like this question on IACI. That's a head and shoulders formation. You're breaking down on the neckline here through the 50-day. So that looks to me to be a short, using the 50-day as a moving your stop on the upside. I would like to be short. I would be more comfortable being heavy short a bunch of stocks or something like this if the market's rolling over. And, of course, I am short a couple of things, but I'm kind of going both ways on some stocks, being short Apple, Coors here, and long other things like NSM or REGN or VRX and others like Facebook, for example. But this one, that's pretty ugly, and it shows you how there is sort of a bifurcated market. But that's a dog, and that's a head and shoulders formation. I don't know if you would call. I guess IACA has had a big run, so let's kind of shrink this down. And this could be, the end of the line for it. So, anyways, I'm glad someone brought that up because that's been hitting my short screens. RTH. What is RTH? Can hold a 50-day. It's not really, but I don't know if it's really a shortable position yet. I guess you could say this is a cup with handle that's failed. Yeah, and you're hovering. You could try and short this. What is this RTH? I'm trying to remember. Oh, that's retail ETF. I'd rather be short, the stock. So, for example, I'm short Coors here, and so that's, I guess, my short on the RTH. So I guess you could try and short that, but usually you don't get as much juice on the downside compared to just picking the right short sale target. In this case, Coors, and also, Lululemon also looks, or Lululemon. Now, I got to tell you, the reason this thing is topped, and it has to have topped, and the reason for that is I, for the first time in my life, and for the first time since Lululemon has been public, or at any time, actually, I own a pair of Lululemon yoga pants. Friends of ours and members out there, maybe you're out there, Steve and Fran, sent me a pair of these for Christmas because they know I like to just sit around in a t-shirt and yoga pants. At least not my underwear. My wife says thank you for yoga pants because probably I would be sitting around in my underwear. But when I work from home, my home office, which is most of the time, I like to wear yoga pants. It's comfortable, and but these are a really classy pair of yoga pants, and I really like them, so I'm going to have to buy more of these. But you know how it is. I bought my first pair of Crocs in October of 2007, and boom, the stock tanked. I got my first iPhone about 4 or 5 months ago, I think in August, and the stock topped in September. And now I own a pair of Lululemon yoga pants, so that's got to be it for Lululemon. So short, it's a short here, using the 50-day as a stop based on the late-stage base failure, of course. But again, are you in a bear environment? Can you make a lot of progress on the short side? I think if you pick the right stocks, it's still a bit bifurcated, but it can be at times like tinkling into the wind. So be careful there. But I think it should go on your short sale watch list if the market does fail. So, but those are a couple examples of retail stocks that I think suck. And Coach is another one we talked about last week. Rallies above the 50-day. And remember, I've talked about them being able to go 2, 3, sometimes as much as 4 or 5% past the moving average, just to fake everybody out, and then it rolls back over. But I don't know that, if this one's really going to break yet. Maybe it needs more time. I kind of like the cores in this position, and I like the Lululemon. So I used to think it was Lululemon. They were trying to be French or something, but I guess it's just Lululemon. Shows how much I know. UA, Under Armour. It's kind of doggy here, but I think you got to short it on the rally into the 50-day 5 days ago. So a little bit late here along the lows. You're undercutting a little bit. Maybe you're going to bump up. So, but in terms of actionable, I liked Coors and I like Lulu. Herbalife. Someone yesterday, there was an announcement, I guess the last few days, that Ackerman or somebody was long or took an 8% position in the stock. And that's been sending it higher. But it does show why when you get a nice break, and you start thinking you're going to make enough money to buy a small island or a private jet or whatever, you got to set your 25%. You start looking at 20-25% profit in a short sale target. I think you have to look at least taking partial profits and locking some of that in, so you could sit through a bounce and see where that goes. In this case, it would have taken you all the way back up to the 50-day moving average. It's not fun if you're still short that, but it's in a shortable area. I'm just not sure if with all the news surrounding it, I'm just not sure I want to go after that. Like I said, I would look at the other ones. Interesting that we're getting questions about short sales and not everybody asking about what to buy. Repros Therapeutics. I don't know. Does this one hit your RPRX? Kind of a thin, small stock.
And it's a
too
biotech.
thin and losing money. It looks great technically. I mean, the base looks fine, but I'm not going to play there. It's too risky. Of course, we thought that the other day about Onyx on this pocket pivot coming through, but it's moved higher. But who knows how long this is going to last. I still think you got to keep an eye on Apple, because I do think that if it breaks down here and you see it starting to head to that 500 level in a hurry, I think that could be a bad sign for the market. So, Tex, what is that? Terex. Nice earnings. This looks like a buyout to me. Is this a buyout? Somebody buying these guys? Because you gap up and then you hold really tight.
Let's see. What's the volume? No, it shouldn't be a buyout because the volume's not there. So it's just holding tight along with the rest of the market.
Okay, somebody asked us the other day whether AMBA is a pocket pivot. Well, I would say this much. Let's see, 1, 2, 3, 4, 5. So this action, that's a pocket pivot volume signature, but it's not a pocket pivot buy point because it's pretty well extended from the 10-day moving average here. In fact, a good 5% past it here. But also, if you, as Dr. K likes to say, these are also contextual to its position within its overall chart pattern. And a pocket pivot occurring in an almost parabolic move to the upside is not something you really want to be buying. So the person that saw that and asked us about it, you're seeing the right thing in terms of the volume, and you're kind of close to the 10-day. But even if, let's say, you were a little bit closer, you're still above it, and that's tenable that way. I think that the fact that you're in this position rather than either in a base or just coming up a shallow uptrend along the 10-day moving average, after a breakout, I think that means this is a little risky buying up here. So you don't want to be doing that. NXPI is another one we're getting questions about. Smaller stocks acting well, looking like it's trying to gap up today on a sort of a pocket pivot volume signature today. If it gets above this volume bar here, it is. But it's a little bit of an erratic name, and what's worse here is you have 12% earnings growth in the last quarter coming on the heels of negative 10% earnings growth. So that kind of earnings growth is not something we would buy, period. John T comes in with them, but we talked about that, John. Great Christmas card, by the way, John. That was very, very fun. And I loved your blog on your trip across the country, and especially that story about being in Utah and the guy giving you the Book of Mormon as the only book in town you could find to read. Anyways, Weyerhaeuser, it's acting well, but not something we would really look at. So, and it's extended, so not really in a buy point. Earnings are turning around. You know, it's kind of reminds me a little bit of Whirlpool. These are stocks that you would never expect to be doing anything constructive. And Whirlpool had a gap up here, and it's holding tight. There's a big turnaround in earnings, I guess. We talked about this last week, but you know, that's also not really something we would buy. But Weyerhaeuser, I don't know. Is there some theme here? Dr. K, you know anything about Weyerhaeuser? Why they're moving? Building wood products? Is it just the building thing, and that's what's driving it higher?
Yeah, I think so. I don't think there's any particular major news event. Except the last earnings were good, and the stock had a really good run on that day. But other than that, and it's a good industry group and all, so I think it's just pushing higher gently.
Lumber liquidators, you know, this one, I was looking at this the other day on this pullback, and I thought, okay, this thing's going to try and come out of here, and I'm not sure. We just missed a pocket pivot here, but you're extended at this point, so it's trying to come around and build a base. So that's really all it's doing. If you're looking on a weekly chart, you're building sort of a cup base. It doesn't look too bad, but I think it needs more time to form, you know, and it could break out. Aquin Financial, you guys know we like that one. Based on the pocket pivot, and it's holding up after this pocket pivot. It's also kind of a low base breakout. You know, if you're the type of person who likes to draw lines on charts, you could just, you know, do that and say, oh, that's a buy point right there, just on that basis, and say that's a base breakout. But when you look at the financials, we don't really like these banks, but these guys are in the mortgage servicing business, so they're in the same pool with the NSM, and so they moved higher on Monday along with NSM on the news that Bank of America was selling off some of their mortgage servicing assets. I don't think OCN got any, but the whole business is expected to do well this year and to grow rapidly because I guess the banks are kind of offloading their mortgage servicing business, and so there's going to be more being put up for sale, I suppose, and these guys can come in and they're in a better leverage position to deal with the business than, say, Bank of America. IPGP, I've seen this one many times before. It's just forming a cup of handles, so you just kind of got to watch it. But, you know, this sort of stuff here, a big volume gap down off the peak, that's not really what you want to see. And I think one of the reasons I've never liked this stock is, number one, it's pretty thin. Number two, earnings growth, 23%, and then the quarter before that, 14%. 13% estimates for the next quarter. So kind of, you know, pretty feeble there, to tell you the truth. So it's not really that attractive to me, and it's a thin name, so I just stay away from it. Dr. K, you got any thoughts there?
No, you pretty much covered it. I mean, it's got those defects, which make me quite uninterested in the stock, and then, you know, just recently that big gap down on big volume. And it did that prior also when it reported earnings back in October.
Right. Apple trying to break the lows here. Someone's asking, how is QE propping up the markets? I presume it would be by increasing the money supply and giving investors more money to invest in stocks, but I've not seen much evidence of this. Well, I think the whole rally over the last 3 years has been a QE-driven rally, and most of the money goes onto the balance sheets of the banks, and I think they can use it, you know, internally to drive into the market when they're not able to earn any interest anywhere else. So, you know, I guess that may be where it comes into play, but other than that, you know, you don't know for sure. So, Dr. K, you want to, you know what, I'm going to take a quick bathroom break. You want to talk about that concept?
Yeah, sure. Actually, there was a question that came up basically that says that he remembers long ago we were saying that U.S. debt is closer to $70 trillion compared to the $15 trillion figure that is out there in the news. And he wanted to ask if we could go into that into it a little more detail. And he also wanted to know about the minting of this $1 trillion platinum coin and how that would affect things. In essence, the actual liabilities of the federal government, and that includes Social Security, Medicare, and federal employees' future retirement benefits, they're already at over $80 trillion, which is about 550% of GDP. So why haven't we heard about this crazy, titanic $80 trillion liability from these programs? Well, these actual figures don't appear in black and white on any balance sheet. But if you look at, for instance, the annual Medicare Trustees Report, you'll see that the separate estimates of the unfunded liability for Medicare Part A, which is the hospital portion, or Part B, the medical insurance, or Part D, which is the prescription drug coverage, you'll see that that the net, what they call the net present value of the unfunded liability of Medicare was at a staggering $42.8 trillion, and the comparable balance sheet liability for Social Security, as another example, is at $20.5 trillion. So the numbers add up pretty quickly and well exceed the reported $15 trillion figure. Now, as far as that $1 trillion coin, naturally it's a gimmick, it's a stopgap, and it's only going to serve to drive inflation higher. You just can't create wealth out of thin air by printing money. The dollar's going to pay the price. People's savings are going to pay the price.
Yeah, so we better hold on to our physical gold and silver, eh, Dr. K?
Physical gold and silver, real estate, and certain stocks.
No, I think that whole thing, it's just amazing. It just shows you how the government is just off their kilter, as far as I'm concerned. But this is the sort of thing that runs through their minds. This is all the manipulation. You can't help but think it's all going to end very badly at some point. Let's go through some more names. Try to get in as many questions as we can. ACHC, Acacia Healthcare. That's a breakout here. Is that a pocket pivot breakout? I think so. And then you gap up here. So you're holding up okay within buy range of the breakout. Let's check out the numbers here. I think the earnings growth, though.
Yeah, that's
last quarter. You know, that's a problem too. I think some of these are news related, but some of the, you're seeing the number of these stocks in the group doing well. But I don't know what to make of this.
Yeah, no, that number is not a one-time thing. It really was down. Well, it had a big quarter, that 33-cent quarter, so it was up big, and then it went back to normal. So you could basically say that the earnings line was exaggerated a year ago. You know, if you look at the earnings line, there's a big spike, and then because of that spike, the latest quarter is down compared to that same quarter a year ago. In other words, all that's to say that the earnings line still looks pretty good, and I would probably, I don't know, the earnings line, I wouldn't penalize the stock for the earnings. The sales look pretty good. Institutional sponsorship keeps climbing, actually quite dramatically. So, yeah, actually, I would, on second reflection, I think this stock is more interesting than I initially thought when I saw that negative earnings quarter.
Okay, so it looks okay within buy range. So you're going to run out and buy right now?
No, there's something I still don't like about it. Yeah, it's a little bit slow and sluggish. It tends to violate the 50-day moving average, although, you know, 2012 was one of the most challenging, sloppy years. So you got to be, you know, careful not to take this price action out of context with how challenging.
How about this Catamaran here, Catamaran Corp? This thing's choppy as all heck, and now it's come straight up off the lows of the base and broken out. You like that?
Yeah, it looks like the earnings are going to be accelerating. The sales are up very, very strongly. Institutional sponsorship, well, that's been in the last quarter, it took a big jump. So yeah, this one's okay as well. Yeah, I mean, these are not incredibly exciting to me, but I guess in this market environment, you know, if you're going to play something, you know, CTRX and that what was it, ACHC, they're you know, they're not the worst. They look playable, especially in an uptrending market.
Yeah.
And these things are breaking out of basing patterns. So yeah, they're ones to watch.
Yeah, and you know, if you like a stock and you think it's okay, don't act, you know, solely on the basis of what we think. I mean, we've already proven that we're not right all the time, and we can miss things like this. Kihu has been one of the best performing stocks in the market, and we didn't like it, you know, before it had a pretty good move of over 20%. So, you know, any stock, if you think it has the right characteristics, you can come in and buy it as long as you have your stop. Gil, last week you mentioned Commvault. Do you still like the stock? I think the stock it's okay. I don't see anything really wrong with it. It's getting a little erratic up in here. Now you notice it pulls down on heavy volume for a couple of days, and then you get nice support off of the 50-day moving average, which is constructive. But to me, it looks like, you know, if you're looking at the pattern, you're up 1 week, down 1 week, up 1 week, and then spinning around. These are wide ranges. These are not really tight ranges, so I'm not sure what to make of this. And so I'm a little bit cautionary about this stock currently. I've liked the story, but I think it would have been easier to buy it down here on this breakout do this sort of 1, 2, 3, 4, 6-week flat base after this breakout from a cup with handle. So being in it up here, it's starting to swing a little bit, but that seems to be its nature. This just seems like a little more than what you've seen in the past, and it strikes me as a little bit funky. So if I owned it, I'd definitely keep a short leash on it, but I do think it's in an area that is strong, this whole cloud-based thing and big data, as they call it. You know, I think Amazon is a big data stock, and you had this gap up breakout, and then, you know, this looks really bizarre, but let's think about a couple of things. First, you have this big move off the lows. I mean, that's almost straight up. So that's a very steep move, and then you form like a 2-week handle, and it may have been that this isn't enough of a handle to give it to allow it to come off of here constructively. So it needed more time. So in other words, you still got a lot of this money that down here that made some fast profits. They see this, they sell into it. And then it broke down when there was news that holiday sales weren't, you know, going as well as everybody expected, and I guess being supposedly seen as a big e-commerce firm, Amazon got hit. But if you look at the weekly chart, you know, it looks a little more coherent here, and you might consider that this pullback helps to correct this sharp move off the lows, this weak, tiny handle here, which is really only like 1 week, and that probably wasn't enough. And now you get this gap breakout. Now, this better work, because if it doesn't and it fails, look out below, and that may also have implications for the general market. Will you be posting an errata sheet to your website? I think we probably will do something like that. So this is something somebody says. Here's a trick for proofreading. Read the whole thing backwards. You quickly pick up errors through though the procedure is a pain in the ASS. Yes, it is. But you know what? We'll try that next time around. Maybe that's what we should do. What happens is you look at this saying so many times, over and over and over again, that I got to think that at some point there's something in your brain that just kind of goes numb and just doesn't react to something. What do you think, Chris? You think that's
Didn't you
what
see
happens?
like one of our submissions? One of the corrections we sent wasn't corrected. Somehow it got lost in the shuffle.
It looks like something didn't, and it also looked like on that one answer that something got flipped around, and there was an answer to another question that got substituted in terms of the actual letter. So I don't know. Well, I mean, the only thing you can do is correct them. That's really all you can do. You can't rewrite the whole book. So we'll just have to do that in the next printing. But but that's the curse of writing a book. The other curse is I hate to look at the things after they're written because I just can't stand it. There's so many things I see I could have done differently, and I looked at this one for the first time last night, looking at some of these errors people have been pointing out, and I already see a lot of ways we could have improved it, but we'll save that for the next book. So you get better every time, you just never get to the perfect place you want to be, I suppose. It's such as the way of kind of like trading, kind of like life, I think. But anyways. Stratasys acts pretty well. It's a lot like Triple D. Triple D had this viable gap up it's been holding. You get a nice whack here off the peak, but it holds up. The only thing you do is hold if you bought the viable gap up here using that low here as your stop right above the 55 level. On SSYS, I think between the two we like Triple D better, but there's nothing really you can do here. You're just sitting with it if you own it. So. DGI, I like this digital globe. I think this is interesting technology that they have. And you have a nice big breakout. Here's a pocket pivot type of breakout here 3 days ago. It is a thin stock. It trades 460,000 shares a day. That's the only thing I have against it. But I think if you have a smaller account, I'd watch this on a pullback to 27 because I think this is interesting. They've got great earnings. Sales growth could be better, 800% earnings growth in the last quarter and 1,150 or 1,150% in the prior quarter. Next quarter they're looking for a growth of 170% on a hard number of 27 cents. So I'm just watching. Here goes the Cirrus now. Bingo. Yeah, it's starting to roll over. Maybe a short. If Apple breaks, this will go with it. So you can pick one or the other, I suppose. Somebody said, I really like the detail in the Trading Cockpit book. Also reports each morning a great improvement in your services. Thank you. That was, the whole genesis of this new book were all the questions that we got from all of you guys. And, of course, we dedicate the book to the members of virtuousselfishinvesting.com because it's through your emails and through your questions, no matter how dumb they might seem, that we actually got a lot of insight in terms of understanding what people get confused by. And we were trained by O'Neill, and we learned the system, and we picked it up pretty quickly, I think, mostly because I think we're both pretty visually oriented. We visualize things, and we pick up on that, and patterns as well. But a lot of people who are new to the system, it's not so easy for them to comprehend, and I've realized that, It's kind of like if you have a natural musical ability and you pick up an instrument, it's pretty easy right away. Another person may have some latent ability, but it needs to be developed more, and so it's not so easy to them right away. And I think that's the one thing we've learned. And we felt that in the book, what we needed to do is get down and get dirty, basically, and create a book where the reader is very much involved in terms of being active, proactive, and interactive with the material, and I think it would have worked even better as an e-book. What was that? There was some media enhanced e-book or something.
Yeah, I mean the problem is that the retailers don't have the technology to carry it out yet, and it's still about a year and a half off. But the idea is that a reader could resize the charts, play with the axes. We could really take them through a multimedia trading
and more exercises. Because you're not using up a bunch of paper, because to do all those trading simulations, they take up a lot of paper. And so I think it's possible we could do a second edition of this that would be expanded when we're able to use that technology when it's ready to go. And so that could be an exciting second edition of that book.
Yeah, there's no question. I know Wiley was looking forward to something like that, because that really would be a first in its kind.
Right. You see this one's breaking. I think this is short. I showed it earlier today, so... and I'll on some of these, if they come down sharply, I'll let them rally a little bit higher and see if they roll over again. So now I'm going to triple up my position here and see how that works. But stalling out at the 200-day. You notice how we looked at it going into the 50-day, and of course it gets through there. But what you notice, you got a black cross here, so it looks kind of feeble. And I think that if Apple blows, this thing's going to blow with it. So I also notice cores continuing to move lower, and so I'm happy to be short that. Somebody's asking if ARMH is a climax run here. No, that's not a climax run, I think, because it is climaxy, as Bill O'Neill used to say, because you did break out here and you're running up. Now you sort of have a gap up at the end of this move. So you might consider it at least an exhaustion gap. And you're up 1, 2, 3, 4, 5, 6, 7, 8. You're up 7 out of 8 days here. This would be the biggest point move in the move. The only thing is these climax runs usually occur later on in the stock's move, and this is, about 2-3 months afterwards. What do you think here, Dr. K?
Yeah, I created there's an algorithm that I created back in the day. This would be the late 90s, that identifies climax tops. In other words, there's lots of how do we say it? There's very few real climax tops. They're very rare.
Right.
And
lots of climaxy action, though.
Right, and those don't count, because if you start counting stuff like this one, then you're looking at literally thousands and thousands of these kinds of examples, and it becomes meaningless. But when you get a real bona fide climax top, it's so obvious. The stock's made huge runs. Sometimes it's run for a year, 2 years, 3 years. Maybe went up several 100% or more, and then it goes on a huge tear to the upside, and then has a gap up at the top. So my algorithm essentially identifies those percentage characteristics in the price action and the volume action at the top, and also the run leading up to the top. So Syntax, for instance, had a beautiful climax top at its top. It had an earlier climax top in its run. This is, I think, in 1962 when it started going, but that didn't quite qualify, because it really hadn't made enough of a move to call that the first climax top a real climax top. Second one was very obvious, and a number of these stocks have done just the same over the years. That Amgen in the early 90s, and Amazon, CMGI, loads of these stocks had big moves at the end, which finished them off. So they're very rare. Just keep that in mind. Everyone should just keep that in mind.
Yeah.
You really have to. It only happens once in a lifetime of a stock, typically.
Yeah, EXP, that's not a climax top, so really not. At this point, you're up, 3 out of 7 days here at this point. Not really climaxy.
Yeah, and it's only really been running for, half a year.
Here's a question for you, Dr. K. If you buy a Bible gap up and make a 3 to 5% gain, I'm assuming right away, Do you let this turn into a loss before it hits your stop, or stick with your stop?
It depends on your risk profile. You know, I mean, it depends on the context of the market. If the market's really weak, it could drag it down, and you might want to hold on to a piece of it. If the stock relative to the market is holding up okay. So yeah, the percentages, it really comes down to every person's got their own profile, risk profile, where they're going to start taking profits. But whatever you decide, make sure that it is in alignment with your trading personality, so you don't end up getting whipped around.
Yeah, some work and some don't, and you have to decide where you want to get out. Usually the way I operate, since I run generally bigger positions, is if I buy a stock and it runs up 3 to 5% and it comes right back to where I bought it, I just blow it off. I blow it out and just forget about it, because it shouldn't be doing that. So, you don't want to get underwater. Like, for example, let's say NSM. Let's say you bought it, but you bought it, near the close of that day. Now you're just underwater. I mean, so you could blow out a bit and see if you want to re-enter at some point. But that all depends on the size of your position, or you could sell half of it and then see how the whole thing pans out. But right now, I think we're seeing a pullback on basically average volume right now. I'm showing a big 0% here. So, anyways, so you really just have to decide how you're going to handle it. Wouldn't you say, Dr. K?
Yeah, exactly.
Alchemies, runs up very sharply off the lows of the base, so you're pulling back. Not really heavy volume. It did reverse after gapping up. That's not really what you want to see. But that's a little bit of a short-term climaxy move. But, it's a breakout, so it could pull back to 21 and it would still be okay, theoretically. I'm going to run through some more here. Someone says Kramer had it a buy, plus did technical screens. Analysis said it could break out big. So much for the mouth. What stock was that? Man, there's a lot of questions, and we're getting right up to the end of the hour. I'm going to try to run through these as quick as I can. So, Dr. K, if I bring you in on anything, make it quick here.
Yeah, minus 1 minute.
Priceline, PCLN. It would have this is not a short right now. It would have to break down through the 200-day moving average, but it's kind of in this the peak here of this sort of choppy pattern. It's sort of a hunchback of Notre Dame, head and shoulders, as I call it, because there's no left shoulder, or if the left shoulder's there, it's kind of really, you can't really see it. So it's possible it could be a short. Market doesn't want to look like it's breaking down though. SWI, Solar Winds had a pocket pivot move, but not really great earnings here, so it's not really one that we focus on. HCSG is 13% earnings growth in the last quarter. Healthcare Services Group, another healthcare stock breaking out, but we don't like the numbers on this one. The other one was better, I thought. POL, Polly Wanna Cracker, we love that one. Yeah, it's had the Bible gap up. That's your stop right around 21, and it's pulling back to the 10-day. So nothing really unusual there, just hanging out. There's no other buy points. Is Celgene on track to run up 20% in 2 to 3 weeks? Would you consider holding it for 8 weeks? I don't know if it's on track to, but if it does, that doesn't really figure into our thinking. Dr. K, you want to pontificate on the 8-week rule?
You're talking about the 7-week rule on the sell side, or
no, the 8-week rule in terms of if a stock goes up 20% or more in less than 3 weeks.
Oh, that rule, yeah. No, I mean, we've been through this. It's not something we use. Simply because it's more important to take market context into account, and
yeah,
if you got some gains in a stock, and it's a bit slow, than the general market, and the general market's a lot stronger, then yeah, take your profits. I wouldn't even wait for 20% though. I would sell it at 15% profit or 10%. Especially as long as there is a stock out there that is looking better, make room for it by selling the slower one.
Yeah, but that's a big move. So you're going from like 82 to 94. You're a long ways from 20% right now. So, but I would just watch how it acts. I don't think there's any way to anticipate this. The donut's still acting okay. It's a little extended, so I'm looking for a pullback into the 10-day moving average, which hopefully the 10-day moving average will be a little higher than this 1050 low on the Bible gap up. It's acting well, but you can see it's losing a little bit of velocity, so a pullback, given the magnitude of this run, would not be unexpected. And I tell you, I had some of this. I sold it yesterday into this move because I just thought, you're getting a little bit stretched to the upside and you're running out of gas, so pullback. I'd like to see what it does, and hopefully there's another buy point. I hope it doesn't just turn around and take off. But I like this stock longer term. I like the turnaround. We like the pattern. But it is up there, and we're just hanging. So Rax, did it have a pocket on 1.8? Probably extended to have a pocket, but you could consider that was a continuation pocket pivot. It's not going anywhere. So, but yeah, it did. You saw the right thing. We talked about lumber liquidators. Sky W, what is that? Sounds like bot. It's a thin stock. It's kind of coming up this big ugly pattern. So I'm not really. It's an airline too, SkyWest. Airlines have been doing well. I'm not really a buyer of this. It's too thin. It trades what, like 100,000 shares a day, 366,000 shares a day. That's too small for me. But it acts okay if you really like it and you understand the story and you like to buy stuff like this. And I guess you would say that you had a pocket pivot where, well, nowhere in here. So you haven't had anything since this sort of breakout right here. Baidu, short right here. I'm not in the mood to short Baidu. That's a gap up move. The volume is increasing. That's a pocket pivot volume signature. I would just stay away from that. That could rally all the way to the 200-day. And probably, I'd stop liking it right in here because it seemed like you're getting more upside volume than not. And of course, the IBD writers are telling you it's a short here. So to me, that was a clear sign to avoid it. Someone says, I do want to thank you for confirming a hold on Celgene in last week's call. Okay, well, that's good. Yeah, and you answer, you handle the position according to how you intended to at the outset. And of course, I'm glad that worked out for you. So you're sitting on a fat profit. Now you have the rich man's problem of where do you sell. What's the name of your book that you just released? It is, what is the name of it? I forget. Ride in the Cockpit.
The Trading Cockpit with the O'Neill's Disciples.
The person who asked that question is Hanky Panky. I love that name. ACHC has a 65 composite rating. Does that matter? To me it does. I don't like to buy any stock that doesn't have an 85 composite rating or higher. Is today's gap up in TIFF shortable? Let's see. Tiffany. That's a gap down. But, it's able to regain the 200-day moving average. I don't know. Tiffany is a weird stock. It looks like it's going to blow apart, and then it doesn't. It may just be one of those things that takes a long time. But it's been in this ugly downtrend for a long time. And, here you are. You've just been noodling around. So I don't know. I like the cores right now because it's going lower, and I think that works better. But yeah, I don't know. It's a tricky one. And I've tried to short Tiffany. I've never made any money on it. Abercrombie & Fitch is in a doggy pattern. It's basically in a big ugly downtrend. Not a stock I would want to buy. And I don't really see any reason or rationale to be shorting it necessarily right now. So, what do you think of HSY? What is H? Is that Hershey? Hershey's more of a defensive stock. And it's trying to break out of this space. I'm not really a big Hershey fan. I do remember, though, I had a client back when I was a broker, and she had so much Hershey that her mother had given to her. She may still have it. Urban is, this is one of the better retailers, but it's run up and it's extended. Here's your breakout here. I guess you could call that a sort of a viable gap up type move. I don't know if it's big enough, but it's just moving higher. There's really nothing to think about it. Somebody says daily swings in stocks like SSYS and 3D are getting bigger and bigger in both directions. I think that we saw that in Commvault, CVLT, and that's sometimes cautionary, but it seems to be the nature of these stocks. So someone asks, is Gilmore report available for iPad? No. Let's see. Alexion. we got blown out of Alexion when it gapped up through the 50-day moving average, and no sign of it giving up anything right now. And I think part of that has to do with the fact that you're seeing a lot of biotechs moving higher and acting well, like the Onyx, like the Regeneron, like Celgene, like I think even Gilead is hanging in there, but Celgene,
Group rank is 36.
Yeah, and so the group is strong. So one of the things you don't want to be doing is shorting a strong group, and because they'll just take everything up with it. And so, not really a fertile, should I say, a fertile area to short. So, yeah, I really get tired of them using that silly 18,000% stuff in the book, because let's get real, that was done mostly in the 1990s, early 2000s, and those were heady years where you could make a lot of money. So we haven't done that for a long time. I'm hoping that there will be a period that we're able to do that again, but we'll see. But don't get carried away with that. The publisher loves it because obviously it looks great and it sells books, but there's a few caveats that come with that, and that is that number one, it was done during a parabolic market environment that was a lot easier to make money in than the one we're in today. So on that basis, take it with a grain of salt. But it sure looks cool. But anyways, I think that's really all I have time to go through. It's already 10:08, so we've gone for over an hour. So try to cover as many questions as possible. I would say in the future, if you guys have questions, you might email us with a list of stocks you want us to look at, and we'll be happy to do that. It'll help us get through them faster. But really, that's all we have. It's sort of a mixed bag here. I'm over here being a maniac trying to short Apple and Coors and this CRUS, which doesn't really know if it wants to give it up here at the 200-day moving average or not, but I'm hoping it does. We'll see what happens. But it's a little bit of a mixed bag, so I think you just go with what's working and hang in there and stick to your stops. That's really all you can say. In the meantime, the trend is still to the upside, pending any further evidence to the contrary, and I think that's basically where you're at. Dr. K, any final comments?
No, let's just keep an eye on things. We are technically in what seems to be the nascent part of an uptrend, and with QE at the full force, and with the fiscal cliff tax issue behind us, I think we'll start to see more constructive action for 2013.
Okay, we'll see how this pans out. But those are just what we think might happen, and always watch the market action in real time, because as we know, opinions are frequently wrong, but markets seldom are. And so, what we think today could change in a couple of days, and all we have to do is remain open to whatever the market's telling us. And I think that's pretty much.
Yeah, stay flexible.
The way to go. Yeah, so that's that. Anyways, thanks for all the questions, everybody. Thanks for the great comments about the book. We hope you enjoy it, those of you who do have it. And, of course, let us know about those errors. We will probably, I think it's a great idea to post a list of errors or errata on the website, which I think we'll get to work on. Anyways, catch you guys next week or the next time we do a webinar, and good luck today. Well, take care.
So long, everyone.